Hi tribe. So this week I sold a whole life insurance policy to a 25-year-old young man, and I'm here to share with you this story so that you can get both impressed and shocked with me, because I still don't know how to feel about it. I'm like, I don't know whether to feel shocked or whether to feel impressed. I think it's a combination of both, but I have to share it with you so that you understand where I'm coming from. So 2 weeks ago, I shared in my weekly newsletters that I bought a whole life insurance product, and so I pay 7,330 shillings per month, and out of that, yes, I pay 7,330 shillings every month towards my whole life insurance policy. And from that, I get a 10 million. The first benefit is the inheritance benefit, to mean that if I passed on, whether in old age or prematurely, my beneficiaries would get a payout of 10 million shillings. And remember, the way a whole life insurance product works is that you have to you have to be dead in order for your beneficiaries to get that money. So one of the most important reasons why we buy a whole life insurance product is because if, for example, if you're a parent, so if you're a parent and you died prematurely, your kids still need to be provided for. Your kids still need school fees, still need to be dressed up, still need food. And so if you passed on prematurely, they would still need all those things. So we buy a whole life insurance product because a whole life insurance product replaces your economic value, replaces you, because you are the income provider. So if you passed on, they still need that money. So yes, so that's how the 10 million comes in. They would get 10 million if I died either in old age or prematurely. So beyond that benefit of inheritance, and that is the main reason why we get a whole life insurance cover, for inheritance planning, to give your dependents, your kids, a lump sum amount if you passed on prematurely. Even if you pass on in old age, they would still get that money. But you get a whole life insurance as early as possible, because none of us, we do not know tomorrow. We do not know what would happen to us. So beyond that inheritance, my cover also gives me a 5 million critical illness cover. So if, God forbid, I am diagnosed with a critical illness, the likes of cancer, kidney failure, coma, all those things, I would get a 5 million cash payout. I, Agatha, would get a 5 million cash payout to my bank, and then I would decide whether I want to be treated in Kenya, India, Europe, whenever, using that 5 million. The other inheritance money, that is purely for your kids. So you have to be passed on in order for them to get it. The last thing that my cover gives me is an accidental death benefit. So if you ever get involved in a road accident, or any form of terrible, gruesome accident, there are 2 bad things that are likely to happen. The first one is you may end up disabled. And if you end up disabled, you need money in order to survive, to get treatment, to live, right? Because that would not be the end of life. And these things, I believe most of these terrible things that we go through in life, it's easier if you have money. So I have an accidental death benefit. So I was saying 2 things. That first one, you end up disabled. The other one is you die. So if I end up with a disability, God forbid, but we plan for these things. If I ever end up with a disability, my cover would pay me 5 million. But if I pass on from the accident, that 5 million would be paid to my beneficiaries. So in this case, my beneficiaries would be paid twice. That is the money from the accident, because I've succumbed to the accident, and the money, the inheritance money that the cover had promised them. It's usually referred to as the basic sum assured. Now, when I shared those details, or when I shared, in depth about the fact that I got a life insurance and those details, this 24-year-old who is part of my newsletter responded and said he would like to get a whole life insurance product, and his budget is 2,000 shillings per month. And I was like, but you're 24, and this is because, most people who get whole life insurance are parents, and who are, most people are like, from 28 up, or, from 28 and above. So at first I was like, you want to get a whole life insurance? I literally had to get on a call with him to make sure that he 100% understands what a whole life insurance product is, like what I've described. So you get those three things: inheritance planning, accidental death benefit, and then critical illness benefit. And I needed to explain to him that, listen, a whole life insurance product is not like those endowment policies that a lot of people buy. You know, an example of an endowment policy is an education insurance policy, where you're told you contribute, for example, 5,000 shillings per month for the next 18 years or for the next 15 years. And then after those 15 years, you get a payout, right? That is how an education insurance policy works, or they're called endowment policies. You pay for X number of years and then you get a payout. For this one, for a whole life insurance policy, you, the insured, will never see that money. You have to be dead. Yeah, so the maturity of a whole life insurance policy is you, the person who bought that insurance policy, you have to have passed on in order for your kids or beneficiaries. And like I said, my beneficiaries for me in this case are my nephews and nieces. Yesterday I helped a 27-year-old get a whole life insurance policy, and her beneficiaries are her younger sister, firstborns are her younger sister, and her mom, because she was like, if I passed on prematurely, these two people 100% depend on me. If I passed on prematurely, I would like to leave them, like, for example, 10 million shillings. So her payout was 10 million. So yeah, I needed these 24-year-old young man to understand that, like, because I felt like I wouldn't want him to buy something that he doesn't fully understand. And right here, I will say that personally, I don't recommend those endowment policies because the return on investment doesn't make sense. But the return on investment for a whole life insurance does. So you should have heard me explaining to him these concepts, and I kept asking him, umeelewa? Like, do you understand that you're buying this for your beneficiaries? Oh, it turns out that yes, he's 24, but he has a child. So he has a 1 year, 8 months old baby boy. And, you know, also I was like, wow, I didn't expect that, you know. So he has a child, and so he understood what I explained, and he was like, yes, I want to buy a whole life insurance policy for my baby boy, because he depends on me. He even said, like, yeah, he didn't have like a 9 to 5 job. He said, like, you know, he hustles here and there, but at the end of the month, he's like, it's usually my responsibility to pay the rent, to feed my family. Yes, he's married, to feed my family, to make sure my son is educated, and so I also have to plan for his future in case of anything. So me I was shocked. I think I was also just impressed. Anyway, so now we ended up deciding that he needed to contribute a bit more in order for him to buy the whole life insurance policy, because if he contributed only 2,000 shillings per month, that wouldn't get him a critical illness cover and an accidental benefit cover, which are very important. You know, it's very good to be protected. So we decided that he can afford to contribute 2,500 shillings per month. And so now, out of that 2,500 shillings, he gets 500,500 cover for critical illness, and he also gets 1 million cover for as an accidental benefit. And then in terms of the money that he's going to leave his child, so I'm reading from my laptop. So if he passed on prematurely or even in old age, the amount of money he would leave his child is 2,147,184. And if you're thinking that, you know, 2.1 million, that figure that I read, is little money because there's always that battalion, remember that this young man is 24. Yes, remember that he's 24, so he's doing something with what he has. Also, 2 million shillings is not little money, honestly, because there are so many people whose parents passed on and they were left with debt, or whose parents passed on and they were left with nothing. And then there's so many of us out here who are also carrying the burden of black tax. So 2 million shillings is not little money. Something else, if you're wondering, so his policy term, his whole life insurance term, to mean how long he's going to be paying for this policy, is 15 years. So let's do some quick maths. 2,500 multiplied by 12 for us to know how much he'll be paying per year is 30k, multiplied by 15 is equals to 400. So yes, in total, in 15 years, if he lives up to, we pray that he lives long, of course. So if he lives up to the full term of that policy, which is 15 years, he will have paid 450,000 shillings in total in premiums for him to be able to get a benefit of 2,147,184 shillings. So it makes sense. And of course, this cover, this whole life insurance policy also has this thing where they pay you an extra 2.5% in bonuses for your cover to cater for inflation. You know, inflation is the rising cost of living, where if I promise you 2 million today versus I promise you 2 million 15 years from now, of course 2 million today is worth more than for 15 years from now. So how much is that? That is 2,147,184. So he'll get a bonus of approximately 53,679 shillings every year. So let's say, for example, he lives for the next 20 years, because of course we pray that he lives long. So if he lives for the next 20 years, we multiply that figure by 20. That is an extra 1,073,592 shillings. So in total, he'll have left his child roughly, 3.4, 3.4 million. That is not small money. Yeah, that is not small money. That is better than nothing. So he's doing something with what he has, and at a very young age, which, man, I was super impressed. So yes, that is how a whole life insurance cover works. The key reason why we buy whole life insurance policies is to protect those we love, those who depend on us, wenye watahangaika if you passed on prematurely. So if you're a parent, you need to be in my DMs as soon as you finish watching these Insta stories. And the earlier you get a whole life insurance cover, the cheaper the premiums and the more money you get, right? Yeah, the cheaper the premiums and the more money you get to live for your kids. What I'm saying here, the older you are, the more expensive it is to insure you. So a 40-year-old person, and for some reason this week I've had so many consultation sessions with parents who are 40, who are specifically 40. I don't know, is it because life begins at 40, so you start seeing clarity of why you should plan for your children or why you should plan for the unforeseen? But yeah, the older you are, the more premiums you need to pay in order for you to leave your kids a substantial amount of money. So a smart financial decision means that you get a whole life insurance as soon as possible. Let me answer one very frequently asked question about these whole life insurance policies. So if you're a parent, you need to be in my DMs as soon as you finish watching these Insta stories. And the earlier you get a whole life insurance cover, the cheaper the premiums and the more money you get, right? Yeah, the cheaper the premiums and the more money you get to live for your kids. What I'm saying here, the older you are, the more expensive it is to insure you. So a 40-year-old person, and for some reason this week I've had so many consultation sessions with parents who are 40, who are specifically 40. I don't know, is it because life begins at 40, so you start seeing clarity of why you should plan for your children or why you should plan for the unforeseen? But yeah, the older you are, the more premiums you need to pay in order for you to leave your kids a substantial amount of money. So a smart financial decision means that you get a whole life insurance as soon as possible. Let me answer one very frequently asked question about these whole life insurance policies. So for example, I said that the 24-year-old, we picked a 15-year term policy. So he needs to pay those premiums for the next 15 years. So people ask, what happens what happens if I pass on 2 years from now, or what happens if I pass on 5 years from now, to mean that you won't have finished paying the premium terms of 15 years. What happens? Your kids still get the money in full, 100%. And that is why a whole life insurance cover is protection for your children, for your dependents. So your kids will still get your money in full. That was actually the whole point of taking the cover, so that you protect yourself or you protect your children if you pass on prematurely. So that's the most frequently asked question. Ask me more questions about this whole life insurance. And then finally, to close this conversation, So that 24-year-old, he has taught you that whole life insurance is not for the rich. Whole life insurance is not for the wealthy. Whole life insurance is not for corporate people, because that is what it used to be sold as a few years ago. Whole life insurance is for all of us. I have it and I'm not rich. He has it, that 24-year-old, and he's definitely not rich, but we take it for protection. Now, to close this conversation, there's this lady, she's in her 30s. I asked her, she's a single mother of one. I asked her, if you passed on prematurely, how much money would you like to leave your child? And she told me 100 million. Hey, working in finance, you will see people and their dreams. And so we calculated backwards and we realized that she needs to pay around 58,000 per month to be able to leave her child 100 million. So yes, we did the math, and she needs to pay around 58,000 in order for her to be able to leave her child 100 million. And I shared this part so that if you're a parent, ever dream big for your child, especially if you can afford it. Dream big for your child. Let us set our kids up for success. And with that, let me go and nurse my flu. But in the meantime, as I do that, if you have dependents, if you have kids, I want you in my DM, I want you to tell me how much can you afford to pay per month. So there's two ways you can think about it. How much can you afford to pay per month in order for you to leave your kids an inheritance? Or number two, how much money do you want to leave your kids? Is it 50 million? Is it 100 million? And then we'll take the conversation from there. I will give you a free discovery call, and we'll be able to protect what matters to you, which I know are your children.